Good morning. I'm Peter Milios from the Finance News Network. Stocks fell Tuesday as concern over the state of the global economy, China in particular, and the decline in US banks combined to pressure Wall Street. The Dow Jones Industrial Average slid 1.02% and breaking a three-day positive streak. The S&P 500 pulled back by 1.16%, ending the session below its 50-day moving average, a move that may signal the beginning of a downtrend. The Nasdaq Composite fell 1.14%. Financial stocks in the US weakened Tuesday. Shares of JPMorgan Chase and Wells Fargo dropped 2% and Bank of America dropped 3%. The action came after Fitch warned it may have to downgrade credit rating dozens of banks, including JPMorgan Chase. Last week, Moody's lowered its rating on 10 US banks while putting other big institutions on a watch list for potential downgrades. Regional banks also traded lower Tuesday, with the SPDR S&P Banking Regional Banking ETF trading down by 3%. Shares fell after Minneapolis Federal Reserve President Neel Kashkari spoke in favor of significantly further capital regulation. Investor sentiment also weakened globally after China reported disappointing economic data and its central bank made a surprise rate cut. Industrial production in China increased by 3.7% in July from the year earlier period, missing expectations. Retail sales also grew less than expected, and the People's Bank of China lowered interest rates by 15 basis points to 2.5% from 2.65%. But that failed to soothe investor concerns and instead only heightened concern about China's struggling real estate market. A packed earnings week for the largest retailers kicked into gear Tuesday. Home Depot reported earnings per share and revenue that beat analysts' expectations, pushing its stock slightly higher. Later in the week, traders will pass releases from Target and Walmart. On the data front, July's US retail sales data came in higher than expected, indicating a stronger than expected consumer. Retail sales increased 0.7% on a month-over-month basis. Meanwhile, economists had estimated a 0.4% increase, according to Dow Jones. In commodity-related news, despite concerns about China's economic growth, iron ore imports are expected to remain stable as prices struggle near $100 per metric tonne, with import volumes staying above 100 million metric tonnes in August due to potential stimulus measures to support key industries. BHP's potential interest in Liontown Resources, particularly its Kathleen Valley lithium project located near BHP's Mount Keith project, suggests the possibility of a joint venture to enhance nickel reserves despite BHP's purported disinterest in lithium exposure. Watch this space. And European natural gas futures experienced a second spike within a week due to concerns about potential strikes in Australia that might impact global supply, leading to a 13% increase in the Dutch contract and heightened market tensions as analysts anticipate a bullish trend if the strike materialises. Turning to US sectors now, all finished lower overnight. Energy was the worst performing sector, potentially aligning with the weak production output figures coming out of China, whilst health recorded the fewest losses. And amidst concerns over the falling ruble due to economic uncertainties following Russia's involvement in Ukraine, the central bank raised its key interest rate by 3.5 percentage points to 12% in an unexpected move, leading to initial strengthening of the currency before some retractment. The SPI futures are pointing to a 1% fall. Thank you for listening and go the Matildas.